Chapter 4, Exercise 4-25, Worksheet, Closing Entries, and the Post-Closing Trial Balance. So San Antonio Veterinary Hospital completed the following worksheet at the end of December. So here's their worksheet. And it looks like they've completed the unadjusted trial balance. So they got this data from the ledger. They created their adjustments, accounts going up or down, to adjust them to the correct balances. Now we have the correct up-to-date balances. Now we need to fill in the income statement columns and the balance sheet columns. And from there on, we would, in the real world, create the official income statement and the official balance sheet. So we need to fill in the income statement columns and then the balance sheet columns. So scrolling down here, we need to know, here's our adjusted trial balance, which came from this section right here. We need to know what types of accounts go on the income statement. In other words, what's the formula for the income statement? It's revenues minus expenses. So where would revenues be and expenses be? Well, revenues are down here towards the bottom, right here. Service revenue, $27,000. So we're going to bring that over. And then we're going to bring over all the expenses. So rent expense, hit your down arrow, 14,875, hit your down arrow, 75, 10,000, 1,100. And then we're going to add up these revenues, and we're going to get a total of 27,000. And then we're going to add up the expenses, and we're going to get 48,000. So this is not good news. We've got way more expenses than revenue. So this company is going to have a net loss. Scrolling down, we need to input our net income or net loss. In this case, it's a net loss. So what we're going to do is we're going to subtract these two numbers, and we're going to find out that the balancing amount is 21,000. So in other words, 48,000 minus 27,000. Or if you want to say the revenues, 27,000 minus 48,000 gives us a $21,000 loss. So to create these, or to make these two columns balance, we need to put the difference on the smaller side. And then we also need to remember that this is a loss, $21,000 loss. And then we can do our grand totals. We got 48,000 on both sides. So again, here's our revenues. Here's our total expenses, and the difference is a $21,000 loss. We check our answer. And now we need to move on and fill out our balance sheet columns. So what goes on the balance sheet columns? In other words, what goes on the balance sheet? Well, what's the formula for the balance sheet? Assets equals liabilities plus owner's equity. So basically all the other accounts, asset, liability, and equity, go on the balance sheet columns. So everything from here on up. So withdrawals is going to go 95,680. Hit your up arrow. We got 8,600. Unearned revenue 875. Salary payable 320, 3,600, 1,100. And then notice that these assets are on the debit side. So we got 23,000, 80, 50, 825, 10, 200, 28, 100, and that looks like that's it. So what I've done is I've moved the assets and the contra asset over to the balance sheet columns because they go in the balance sheet. I've moved these liabilities from AP down to unearned revenue. These are all liabilities. I've moved those over. And then the capital and the draw are also going to be moved over. So now what I need to do is figure out my subtotal. So adding these columns, or adding up those numbers, I get 110, 175. We'll put the comma on there so it's easier for you to read. And the other side, when I add up these columns and the draw, I'm going to get a total debits of 89,000, 175. You don't have to put the comma in there. Okay, now these are not going to balance. So what we're going to do is we're going to take 101, 175, 110, 175, subtract 89,175, and we should get the same difference, 21,000. Put it on the smaller side to make them balance. Then we add these two numbers up, and we get 110, 175, 110, 175. Now, so there's two reasons why we put the balancing amount on the left side in this case. So one reason is we know that the way the worksheet works is we need to balance all the sets of columns. So the only way to balance the set of columns is to put the difference on the smaller side. Let's also think about this number. What does it represent? Remember we said this is a net loss. Okay, so how does net loss affect capital? Does it make capital go up? And remember, capital goes up on the right side, or does it make capital go down? Well, it makes capital go down. Losses decrease capital. So that's another reason why we know the net loss goes on the left side of the balance sheet column. All right, now we're going to prepare the closing entry. So remember, even though we've done the worksheet, we've not actually closed anything in our official records, which is the journal. So the steps to record, or excuse me, the steps to close are REID. R being revenue is closed, and then expenses are closed. I is income summary, that's closed, and then D for draw is closed. But My Accounting Lab is nice to you. They remind you what is going to be closed first. So they tell us to start closing the revenues. So we look up here and notice I'm only going to be concentrating, since I'm looking for revenue, I'm going to concentrate on the income statement columns. So here's our revenue, 27,000. So how do I close this? So notice this revenue has a credit balance. So to close that to 0, I need to debit the account. Okay, so what we have to know is that revenues in this first step are going to be closed to income summary. For the same amount. We're not closing income summary, we're closing revenues. Now, closing these accounts is easier if you keep track of the T accounts, especially income summary, on a piece of scratch paper. So I'm going to keep track of it in Excel. So what I want to do, let me scroll back up here so we can see that better. So notice I have credited income summary. So I'm going to put 27,000 on the right side and remind me that that's revenue. Okay, so I'm going to put the scratch paper away and let's go on to the next section. So we need to close expenses for the period. So scrolling back up here, our expenses are rent expense, etc. So notice rent expenses or expenses in general are on the debit side. So to close them, I need to put the amounts on the opposite side. So rent expense will be a $21,950 credit. $21,950. So why is it that I am skipping a line and then crediting that? Because debits have to be listed first. So I'm going to list all my expenses as credits. And then I'll come back and do the debit later. So we've got, oh, I forgot, I can just copy and paste. So I've got $14,875 of salaries expense. We've got 75 of supplies expense. No need to copy that. Scrolling back up, I got $10,000 of utilities expense. And then we've got, triple click on that to select it, $1,100 of depreciation expense. So now I've closed those expenses, and where do they get closed to? Well, expenses, like revenues, get closed to income summary. So to calculate the debit amount, all I need to do is add these up. And when I do, I get an even $48,000. Okay, and then for my T account, I'm going to go back to Excel. I'm going to put 48,000 and then remind me that that's expenses. Okay, come back to my accounting lab. Oops, can't check answer yet because I have to put in the explanation. So we are closing expenses. Okay, now my accounting lab again is too nice to us. They tell us to close income summary, though we should know that. So here's my income summary. It's easier to see now how I need to close this. So how would I close this account so the balance is 0? Well, I need to put the difference, which is 21,000, on, let me put the comma in there, make it easier to read, on the smaller side. And then label that closing income summary. So now when we come down here, notice the way I closed it, the way I closed income summary was with a credit. So I need to credit income summary. Okay, and that matches with my T account or my scratch paper. All right, now where do we close income summary to? Income summary, which remember contains either net income or net loss, that gets closed to capital. So Fitzharris, comma, capital. Fitzharris is the name of the owner apparently. And that's going to be 21,000. Now you should always double check this to make sure you didn't make any errors. So make sure that we are making capital go up or down correctly. So since this income summary contains a net loss, how does a net loss affect capital? Does it make it go up or make it go down? It makes it go down. And then how do we make capital go down? With a debit. So that makes sense. So we are closing income summary. Of course, if you have trouble remembering all the pluses and minuses, you should be using your note card, which would look like this, showing the pluses and minuses, and then notice here's our minus on capital. So that's how we know that capital goes down on the left side. Okay, and now we need to close withdrawals. So withdrawals normally has a balance on the left side. So let's just double check. Make sure that our publishers did it correct. Our withdrawals right here, 19,000, is on the debit side. So we need to close this account. So how are we going to close a debit account? We're going to copy and paste and put it on the opposite side. So that will be my credit. So withdrawals are going down. And then what account is it that withdrawals affect? Well, they affect the capital account. And which way do draws make capital go. We make capital go down. So that's why we know capital has to be on the left side. So we're closing our withdrawals. Okay, and then the last step is to prepare a post-closing trial balance. Oops, I didn't mean to do that. So to create a post-closing trial balance, we're going to go back up here, and we're going to get the data from our worksheet. So which of these accounts have been closed? Well, the revenues have been closed, and the expenses have been closed. So all and draws have been closed. So everything from draw up, so everything from capital up, is going to appear on the trial balance. So we have $28,100 of cash. Scroll back up. We've got $10,200 of AR. We've got $825 of office supplies. Again, I'm just getting the accounts balances up here that have not been closed. In other words, the permanent accounts. Prepaid rent, $80.50. $23,000 of equipment. And then now notice here, accumulated depreciation is on the credit side. Accumulated depreciation. And then we've got 3,600 of AP. We can't close our liabilities. That would be nice if we were allowed to just close them and not pay them. Okay, after AP, we've got 320 of utilities payable. $875 of salaries payable. $8,600 of unearned revenue, and then here comes the tricky part. All right. Unearned revenue. Okay. Now, can we use this capital account balance? This was from the beginning of the period, so we can't use that one. We also know we can't use it because if we plugged it in here, it would not balance. So we need the capital account, but we need to figure out the balance. So notice we started with 95,680. So I'm going to do a T account over here in Excel to keep track of this. Okay, so here's our capital account. Of course, you should be doing this on a piece of scratch paper, much faster than doing it in Excel. Okay, and just for a reminder, the plus side for capital is on the right, and the minus side, oops, did that wrong, is on the left. Okay, which matches our cheat sheet, which says capital is on the plus is on the left, right, minus is on the left. So our capital, we started with this $95,680 on the right side. So I'm going to paste that over here. Let me put it here so it looks better. Okay. And then we have our journal entries that affected capital. So let's go through our journal entries and find the first one that affected capital. Right here. We've got $21,000 on the other side, because that was a net loss, lowering it. And then we've got 19,000, which were draws. Oops. I pasted it right here. Okay. Okay, now I'm going to label these so that it's a little bit easier to understand what's going on. So this is our loss. These are our draws. From adjusted balance. That's from our adjusted balance. So let's figure out what our total is. Need a bottom border. And then so we've got 95,680. We subtract 21,000. We subtract 19,000. And we get our ending balance of $55,680. So now we can take this $55,680. I'm going to copy this. And we can plug it in here. Now we should add these up. And when we add those up, we get a total of $70,175. And add these debits up, we get a total of $70,175. So we're done with the problem. Now you may be asking yourself, do we have to go through this process? Well, technically you don't have to go through that process to find the capital amount. In the real world, that's how it's done. But you could have just plugged in the number here, whatever it is going to be, whatever the number is going to be, that's going to make this column total, this column total. Okay? But you should understand how this works, because this is what's going on in accounting. You take your beginning balance, your loss is going to lower capital, your draws will lower capital, and that gives you your ending balance.